Hi there, welcome to a Kneppy Invest and welcome to the 17th of July 2025. Time is currently 2:39, almost 2:40. So we have about 1 hour and 30 minutes left of trading today. Now, the agenda for today's video, I'll start off by mentioning or looking at some unemployment numbers in Australia, maybe some good news for those who want some interest rate cuts. And then we'll have a look at the ASX today, the best and worst performing sectors, indices, companies. Then I'll transition to the top five stocks of the day, filled with micro and small caps. In fact, you might say the vast majority of companies in the top five stocks are micro caps. Uh, a company that almost made it into the top five, Car Group, much bigger than the rest of the companies. In fact, I'd say combined, the top five stocks would be 1% of Car Group's market cap, maybe 2%. Anyway, Car Group, they're transitioning CEOs. The previous CEO, although he's still in the CEO role, has been the CEO of Car Group for 16 years, if I remember correctly. So a bit of a change for that company. I would assume the share price of Car Group has dropped because it's a change. And yeah, down 3.23%. So not a surprise there. So Car Group probably would have come in at number six, to be honest with you. There we go. Car Group announced a CEO transition, estimated financial year 25 results. And I might also briefly mention Bowen Coking Coal. Some more news from that company. It's looking a bit dicey. And then we'll have a look at the chart of the day. Was deciding between Minres and Mesoblast. Mesoblast just because someone asked me about that company, Tinker312. So I might look at Mesoblast tomorrow, or I might do Mesoblast today and then Minres tomorrow. Although yesterday I did say I'll have a look at Minres today. And that'll be it for today's video. Maybe I could look at Minres and Mesoblast. Okay, first of all, some macroeconomic news. So labor numbers did come out in Australia. And here we go. Australia jobless rate highest since late 2021. Seasonally adjusted unemployment rate rose to 4.3%, ending a 5-month hold and surpassing market expectations, both at 4.1%. So 4.3% is actually quite a bit higher than the expectations of 4.1%. So more than likely, this does increase the chances of interest rates being cut because the central bank of Australia does have two mandates. I would assume most central banks in the world have these two mandates, and that is full employment. Not sure exactly how you define full employment, and also price stability. So really unemployment and inflation. Yeah, so that's their two main mandates. So they don't care about housing prices. So even though if they do cut interest rates, you might see a bump up in housing prices. The central bank doesn't care about that. That's not their mandate. It's all about unemployment and or full employment and price stability. So this probably does lead to a greater chance that we're going to see interest rates cuts at the next meeting, that sort of thing. Okay. Before we have a look at the ASX today, actually, no, I'll do that after. Yeah, I'll do that after. I was going to talk about Bowen coking coal now because I might forget about it. I haven't written it down, but it's in my mind. Anyway, so let's have a look at the ASX today. A pretty good day on the market. If we have a look at the XJO, 8,600 has been a really important level for the XJO, and it still is an important level. So the XJO is right on 8,600 right now. So you can see how the last 3 days, up and down, up and down. So 8,600 is an important level, and possibly today is a breakout. Maybe not, maybe not. I still think we need a little bit more information. Nasdaq up 0.1% overnight. Dow Jones up 0.53%. So we have been a little bit stronger than Wall Street. I'm wondering if the unemployment numbers may have led to a spike. No, not really. I was just wondering why we're doing a little bit better than Wall Street. American futures actually down. There we go. American futures down. Hang Seng's up. Nikkei's up a little bit, both up about 0.1%. So in fact, the ASX has done really well today. So for those who are always complaining how we underperform Wall Street, well, we can't really say that today, can you? Can't really say that today. I think sometimes those people are cherry picking. I want to say perry chicking, but uh, cherry picking. I had to think about it. That's terrible. Had to think about it. I am on occasion afflicted with Spoonerisms. If you don't know what Spoonerisms are, named after Lord Spooner. Spoonerism. There's some really good quotes when it comes to Spoonerism. A verbal error in which a speaker accidentally transposes the initial word sounds or letters of two or more words. For instance, if you go to Spoonerism at Wikipedia page, I'm pretty sure they have a really good example here. For example, blushing crow instead of crushing blow, runny babbit instead of bunny rabbit. So yeah. I want to say it's after William Archibald Spooner, 1844 to 1930. And there is hopefully a good quote here. Someone just mentioned conquering Kongs their titles take. So instead of conquering kings, their titles take. Anyway, that's what I'm going to talk about when it comes to spoonerism. But on occasion, you might see me do that. And sometimes I might not be aware of it. Usually I am aware of it, but sometimes I'm not. So it is a real thing. It is a real thing, by the way, when you do that sort of thing. I want to say it's because you're highly intelligent and you're speaking fast. No, you're thinking faster than you can speak. Anyway, it's good to think that. I don't know if that's the truth. Okay, so a pretty good day on our market today. A little bit better than other markets. So I wouldn't be surprised to see us drop significantly tonight. Okay, best performing sectors today. We have industrial, in fact, green across the board. There you go, green across the board. The more disappointing sectors, staples, materials, telecommunications, and energy, all up only below 0.3%. And some of those are defensive, staples and telecommunications included there. And what else can you say? ASX 200 banks up 0.88%. So a fair bit of volatility in that sector. Down big yesterday, up today. And ASX 20 up 0.58%. Gold's down 0.6%. I did see, yeah, GMD, which is Genesis Minerals, they actually did release an upgrade, or they did have better results than expected. Yeah, the share price was down, which was a little bit surprising to me. Anyway, ASX 20 up 0.58% or 0.6% now. I'm assuming 15 companies up, 5 down. Let's see how right I am. All close. 16 up, 4 down. And the 4 companies down include CSL, Woolworths, Woodside, and Fortescue. Woolworths is defensive, and the best performing companies, Transurban and Rio Tinto. I'm hoping because Transurban is up, the other infrastructure-like company is up as well. What company is that called? I forget. Okay, there's a reason why I want that to be up because I am trading it, by the way. Anyway, I don't really want to talk about anything else when it comes to the ASX today, apart from top gainers and top losers. Okay, top gainers. We have Raptors Group, fairly low turnover. By the way, there was a nice little comment from Trader Hooper. Just a comment, I don't bother looking at gainers or losers with turnover less than 200,000. I find the lower volumes are not worth the effort. I actually do agree with that. It's just where is your cutoff point? That's where it's interesting. So you have 200,000. Stu Percy mentioned 200,000 for a very small company can be good. That's actually true. And Trader Hooper says if the announcement is good enough, the company will get 200,000 traded, regardless of size. That is also true. And Stu Percy then replies, unless the majority of the stock is held by founders and a few large holders, leaving not a lot of stocks to be traded. That's true as well. So I don't have a cutoff point. I just do it not randomly. So for instance, Raptors Group, share price up 92.3% on, yeah, I'd say that turnover is borderline. I will have a look at those companies, but not today, because I'm just going to have a look at one company. And that company is, and the reason I'm doing this is I do know this company released an announcement today, and that company is RLF AgTech. Share price up 33%. Now, the turnover is very close to 200,000. By the end of trading today, it might be 200,000. Fairly small company, 22.3 million market cap. But this company did release an update today. I think I've looked at this company once or twice in the past. So growth business update, July 2025. Cash receipts up 74%. It's nice. Australian footprint now 520 plus stores with recent distributor signings. RLF China pre-orders in June up 73% year on year. Now, I'm pretty sure this company would release Appendix 4Cs. So I'm looking or waiting with anticipation for their June quarter results. So just going to go back to April, look at their March quarter results. just to see if they were close to becoming operating cash flow positive. Fair bit of commentary there. And in fact, they're well off from being operating cash flow positive. In fact, well away. So 2.5 million in receipts, operating cash flow negative $5 million. In fact, product manufacturing operating costs 4.2 million. So that's well above their receipts. So there is a chance that their receipts in this quarter were quite low. And the reason I say that is if you have a look at the year to date, this company could have been operating cash flow positive for the previous 2 quarters. So why were receipts so low in that quarter? I have no idea. No idea, but maybe a company to keep on your watch lists. They are growing. I don't know what they do. Let's actually have a quick look at what they do. RLF Tech, something to do with tech and agriculture. Oh, a plant nutrition company that formulates and manufactures advanced crop nutrition products designed to improve agricultural productivity, crop quality, and soil health. That actually does or is familiar. So I definitely have looked at this company in the past. Okay, so let's have a look at the chart for RLF just to see if it's looking interesting. Oh, it is. In fact, this is looking interesting. Share price in a downtrend from April 2023 all the way through to Jan 2025. You can see very little volume in that when the share price was dropping. We started to see increase in volume in June 2024, but that was not quite the low. And then just after the low, that's when we started to see some big volume coming in. And then the share price has been going sideways. We saw a little bit of a run in the share price back in March, and today's share price is up a fair bit and very close to a breakout. In fact, the share price is hovering at the low or the highs we saw back in March. So very close to a breakout for RLF AgTech. And if they do release a really good Appendix 4C, possibly that will be the breakout. And this would have been a great time to take a position. Okay, so let's go back to the top gainers today. Unfortunately, Raptors, I just want to keep away from. No, I'm gonna do it. I'm gonna do it. RPG, did they release anything today? I can't remember. Yes, they did. Change of address, registered office, and principal place. That's it. That's not price sensitive. When you change address, it's not sensitive. Why is the share price up? This could be an occasion where they get price and volume query from the RF, from the ASX. What was I going to say then? From the RFX? RPG, is this company illiquidly traded? Let's have a look. Whoa, hello. So this is, look at that. Exponential growth in share price up until the 19th of June. And then on the 20th of June, share price dropped 72%. And then share price has gone back up. Yeah, I'm staying well away from this one. Look at the volume. Very low volume as well. Okay, G50 Corp. We'll move on. I'll have a quick look. Very quick look. Just to see if they released anything today. No, again, nothing. So sometimes share price of companies can move on no information. Tiny Means did release an Appendix 4C. Not to my liking, even though the market does like it, but it's on fairly low turnover. And I think from or after that, Clearview, good announcement yesterday. Share price is up again today. I'm pretty sure that chart looked pretty good yesterday, if I remember correctly. So 2 days up in a row. Oh yes, this chart is definitely looking better. I really like that volume with Clearview. Okay, and anything else? Nothing. Although Immuron is in my top 5 stocks. Top gainers by market cap. Fineos, email payments, Mount Gibson, acquisition yesterday, share price up today. And other than that, yeah, nothing else to note there. Okay, now on to the top losers. And I don't think we're going to have much at the top. Okay, so I will talk about, Integrated Research is my stock of the day, by the way. Share price down 16%, and they did release an update, trading update. So I'll talk more about that company. Kairos Minerals, share price down 16.7%, turnover $418,000. And they definitely released an announcement today because I checked. To find the top loser I wanted to talk about. So Mount York drill results. So obviously the market doesn't like it. Let's have a look at drill results that the market doesn't like. So it's okay to look at drill results that the market likes, but drill results the market doesn't like. Wide gold intercepts at Mount York support future resource growth. And the market says, I don't know about that. Results from 16 holes received, 21 meters at 1.87 grams per ton. Yeah. And it's quite deep, 169 meters. 5 meters at 4.26 grams per ton. So it's nothing spectacular. And 34 meters at 0.81, 24 meters at 1.17, and 48 meters at 1.03. Yeah, if I saw this without knowing the share price had dropped, I wouldn't be that enthusiastic about it. I could be completely wrong because I wouldn't call myself an expert at reading drill results. So let's have a look at the chart for Kairos. Kai. And in saying all that, the chart does look pretty good. Has been looking good. This could be a buy the dip situation. Share price has pulled back from 3.4 to 2.5 cents. I would say this is an exploring company. So yeah, so they're not for me. Not for me. Okay. Now, before we get into the top 5 stocks of the day, did I mention Car Group is changing CEOs? I think I did mention that. Bowen coking coal. I think in yesterday's video, or was it the previous day? Oh, you can see what you can see. No. You can see what my banked videos are just by looking there. Public. Da, da, da. Yeah, actually, I released it on what's today? Thursday. I released it on Tuesday. I may be back, but Bowen Coking Coal might be going bye-bye. And today, Bowen Coking released something else from their debtor person, Boomer. Boomer statutory demand. And so this is in regards to 6.8 million of 15.3 million in respect of which the company received a demand for payment. And the amount of statutory demand takes into account liquidated damages. And they also mention here failure by BCB to pay, or Bowen Coking Coal to pay the amount demanded within 21 days of service of the demand will constitute a deemed insolvency event that will entitle Boomer to file an application to wind up Bowen Coking Coal unless the company files an application to set aside the statutory demand within that period. Whoops, sorry, going to go on the break. And I am back, just waiting for delivery. And unfortunately, sometimes you just have no idea when the delivery is going to come. And of course, the delivery happened during the recording of this particular video. Anyway, have I finished when it comes to Bowen Coking Coal? I think there are definitely questions about the future viability of this company. In fact, I can just see a little statement here. Such a deemed insolvency event will result in a breach of the company's debt facility agreements. BCB is considering its position but remains committed to seeking a commercial resolution of Boomer's claims, and to this end is actively engaging with Boomer, although no agreement has been reached yet. So there is a chance that that's going to be bye-bye for Bowen Coking Coal. Okay, now we can go to the top 5 stocks of the day, starting off with a company that did release their Appendix 4C today, Little Green Pharma. I am pretty sure I've done at least, well, for certainly I've done at least one company on, or one video on this. I was going to say one company on this video, but one Little Green. I've done at least one video on this company, Little Green Pharma. There we go. So I've done, 2 standalone videos and probably featured Little Green Pharma in another video with Zuno and rent.com.au, published on 2021. So Little Green Pharma has been in my sights recently. And when I say recently, I mean over the last 2 years or so. And the company released their Appendix 4C today. And I'm very happy to include Little Green Pharma in the top 5 stocks of the day because they are or were operating cash flow positive. So this is a marijuana company, a hemp company. I don't know, what do you call it? Marijuana company. What do they call them? Medicinal marijuana. I don't know. I can't actually tell you exactly what they do, whether they grow the marijuana, if they're vertically integrated, that sort of thing. All I know is they have something to do when it comes to marijuana. They're expanding overseas, around the world. A nice little read up of this company, talking about revenue and cash receipts, revenue by product category, revenue by segment, revenue by brand, etc., EV, NTA, cash, debt, and revenue. It's a nice little write-up from the company talking about cannabis. That's the word I was thinking of, cannabis. Talking about Europe, Germany, UK, Denmark, regulatory update, etc., finance update. Now, let's have a look at their Appendix 4C. This is, in fact, when I open up these documents, this is where I go to straight away. I don't look at any commentary. I just want to see the numbers, and then I might have a look at the commentary if I like what I see. Okay, so receipts up to 12 million, and we'll have a look at the company's receipts history, and this is also something to like. So receipts 12 million, operating cash flow positive 474,000, albeit on a low base. So, I said that completely wrong. So you might laugh saying, wow, it's not much operating cash flow. But again, it's fairly low, but it's positive. That's the main thing. It's positive. And because the capital expenditure is only 106,000, the company is also free cash flow positive. Now, this is only one quarter. This is only one quarter. So keep that in mind. This company has been operating cash flow and free cash flow positive in the past. What I want to see is a bit of scale. I want to see the company increasing their receipts and increasing their cash flow. That's what I want to see. But what we've seen over the last few years is this company has definitely been able to increase the receipts, but has been oscillating between being operating cash flow positive and negative, and also free cash flow positive and negative. Anyway, the other things I look at is how much cash they have, 2.5 million. They've grown their cash, 2.5 million, and if they have any debt. So they do have a little bit of debt, 3.3 million, but that's not excessive. They don't have to answer question 8 because they're operating cash flow positive. Okay, now another thing to just keep in mind when it comes to this company is the difference between revenue and receipts. This was something that did stand out to me this morning when I went through this commentary. So revenue for the quarter was only 9.1 million. So there is a bit of discrepancy between revenue and cash receipts. In fact, a $3 million discrepancy. And in fact, on the first slide or the second slide, they do have a revenue and cash receipts slide. And you can see usually there's not much of a discrepancy, a small discrepancy, but this particular quarter, there was a big discrepancy. So there's a chance that you might see cash receipts down a lot next quarter. I'm just going to say that. Could be down a lot next quarter because there is going to be a timing difference between when you recognize revenue and when you receive receipts. Anyway, so just have that in the back of your mind if you do like what you see for Little Green Pharma. Now on to the cash receipts history. So this is Little Green Pharma's cash receipts history since they listed on the ASX back in early 2020. So cash receipts have grown from 630,000 up to $12 million. And even though cash receipts aren't going up in a straight line, an absolute straight line, on occasion cash receipts will drop. It's been going up quite consistently. And in fact, $12 million in a quarter is a record quarter. I would expect next quarter receipts to have backtracked a little bit, but the trend is definitely there. So there is definitely something to like about Little Green Pharma, and I don't think the company is that expensive. I'm going to say maybe $30 million. Yeah, 34.96 million. So it's not an expensive company. Margin's probably a little bit low, and I'd like to see a little bit of scale coming in, but yeah, nothing to hate when it comes to this company, unless you hate marijuana or cannabis. Okay, now onto the chart. And I don't hate it, by the way. Now onto the chart for Little Green Pharma. Is there anything to hate here? Meh. Share price went on a massive run back in October last year. I wonder what that was. That was around the Appendix 4C time. 17th of October, up 30.68%. Let's go back to October. Was that why the share price ran up? 30th of October. No. They released their Appendix 4C on the 17th. 17th. Do I have the wrong date? No, it was. Sorry, it was. Share price did run up on the 17th. I got the complete wrong date there. So it looks like the market really liked the Appendix 4C for the September quarter last year. Share price went up 30% and then another 35%. Share price went to a high of 16.5 cents, and the share price has pulled back since then. So you might say that was sort of the turnaround for the company's fortunes because the share price was in a downtrend before that. Share price probably not a downtrend anymore, and definitely a quarter to like for Little Green Pharma. But I'd like to see some follow-up, really good quarters over the next few. Okay, now on to company coming in number 4. Company I've mentioned previously in the past, Immuron, share price up 10.77%. So pretty good day for this company. Now, the reason I do enjoy this company, won't say like, enjoy this company is because of their product, which is called Travelan. It's a treatment for traveler's diarrhea. Don't know why I find that amusing. I have traveled a lot in my past. I've never been afflicted with this horrible thing, and I just find it amusing. And apparently it is quite common. And I do, if I remember correctly, Trav or Immuron had a relationship with the Department of Defense or something because, soldiers do get traveler's diarrhea, which is probably a bad thing. Anyway, yeah, they did release a bit of an update today. Financial year 25 global sales exceed projection, up 49% on prior year. So possibly traveler's diarrhea is becoming increasingly more common, maybe. I don't know. Or this product is becoming more popular. People are starting to realize this is a good treatment. So global sales up to 7.3 million, so not a lot, up 49%. Australia sales 5.2 million, so really it's mostly just Australia, up 40%. Annual sales 2 million, up 76%. So they are gaining traction overseas. Anyway, so and so by the way, Travelan is an over-the-counter immune supplement that targets pathogenic bacteria and the toxins they produce in the gastrointestinal tract. So a nice little update from the company. That's not much else in this announcement. And the share price up 10%. So let's have a look at the chart. At times in the past, this company has been a bit of a what can we say? How can you say it? A bit of a hyped up stock. Actually, in fact, we can see it back in March last year. On the 7th of March, share price rose almost 100% in one day. And then the next day rose another 16%, but fell away fairly quickly. And this happened quite often in the past for this company. In fact, if we go back to 2020, there was one day when the share price went up 250%. Share price went all the way up to 95 cents. Yes, so there was a lot of interest, a lot of hype in this company back then, although the hype didn't last very long. In fact, have a look at the volume. And this is a telltale sign that these announcements aren't that powerful or strong. You get the one big jump in volume and then volume just dries up and nothing comes later. No volume spike comes later. So I'm trying to figure out the difference between powerful announcements and less powerful announcements. And I think you need some follow-up volume. I'm not talking about the next few days, but I'm talking about maybe 5 to 10 days after. You need to see some big volume coming through, and you don't want to see the share price high be on the day they release the announcement. But anyway, so this company has been on occasion hyped up for like a day. Anyway, the share price action today, volume action has been nice, but the share price action has been a little bit disappointing. But I can definitely understand why, because the share price has been a downtrend. So we have seen a little bit of selling coming in today, which is understandable because there would be a few shareholders underwater, and this was their day to get out. This was their day to get out of this dog stock. I don't have to tell you what that means and to try to make you understand what it means. If you don't understand, I've talked about that a lot. Okay, so company coming in two companies coming in number 3. These two companies are really small gold. I thought they were gold explorer companies. So we have Adelong, share price up 20%, but share price is below 1%. So this is just a one tick higher. And the other company is GDM. Oh, what is it? A Great Divide Mining. Share price is actually down. There you go. Share price is down. These two companies are in a joint venture in regards to this project at Challenger. And I just saw this title and I went, oh, these are now producers of gold. GDM pours first gold and Adelong celebrates first gold pour at Challenger. So they both released a separate announcement. Which one can we look at first? Okay, so I was trying to understand the relationship between Great Divide and mining and Adelong. And it seems like Great Divide Mining is the operator of this mine, and they got into a joint venture with Adelong, who probably sold out of half of the company, so they don't have to spend much money in operations. But Great Divide Mining owns 51% of the joint venture. Adelong owns 49%, and it's now in production. So GDM, as operator of the Challenger gold mine, has announced its first gold pour at the site. The first pour triggers second completion under the March 2025 share sale agreement, taking GDM to 51% owner of Challenger Mines. So GDM has or was formed to rapidly evolve into a cash flow mining business, deriving revenues whilst conserving shareholder capital. In less than 2 years from IPO, we have demonstrated this commitment. So within 2 years, this company is now gone from a IPO to a producing company. Okay, I wanted to have a look at a presentation. Actually, it was Adelong. It was Adelong. Adelong. Now, I do prefer Great Divide over Adelong just because where the share price is, not the valuation. In fact, the valuation of both companies is fairly similar. And what I mean by that is Adelong has a market cap 12 million, 13.4 million, and Great Divide has a market cap about 13 million, maybe 14.88 million. So why is the share price of Great Divide significantly higher? Shares on issue. So even though the market cap of these companies is fairly similar, there will be some investors who would think that Adelong gold is significantly cheaper because of the share price, 0.6 cents compared to 45 cents. But it's not. It's fairly similar valuation of both these companies. It's just the shares on issue. So Great Divide has 33 million shares on issue, and Adelong has 2 billion, I'm assuming. Just doing the quick maths in my head here, 2.25 billion. So there are some shareholders who just look at the share price of a company and go, oh, that company is cheap, without knowing anything else, without knowing market. But you can't do that. Anyway, I've gone on a little bit of a tangent there. So let's go back to Adelong. They did release a presentation here. No, where was it? I am sure. I'm sure it wasn't that long ago. Apparently they're into antimony as well. There was definitely a presentation I looked at. And I thought it was just the other day. Oh, here it is, investor presentation. I was looking just at the price sensitive announcements, but sometimes investor presentations aren't marked price sensitive because there's no new information that would send the share price up or down. I just want to have a quick look at Adelong and some of the projects they have because they did release a presentation, and also this particular project. So let's have a look. This is what I was looking at. Scoping study update 2022. So 5-year mine life. So it's not very long. Also cash flow. So they are expecting net cash flow of about 69 million, which is not that high. But for a company that has a market of like 14 million, that is quite significant. And net present value before tax of 53.56 million. So it's not a big project. It's not a big money spinner for either company, which is probably why the share price and valuation of neither company has really gone bonkers. Anyway, so let's have a look at the chart for both Adelong. But it's really interesting that it's a new gold producer. I didn't know that. It's nice to know it now. Let's have a look at the chart for both these companies. Adelong, yeah, I'm not going to like this chart at all because the share price is below 1 cent. And it might be years before the share price gets above 1 cent. In fact, it went below 1 cent in almost 2 years ago. So it looks like August, September of 2023, and it's been below 1 cent ever since, has been as low as 0.3 cents, currently 0.6 cents. And the other one is Great Divide. Not a lot of shares on issue. So I'm wondering if this is highly traded. Yeah, it's not horrible. Share price went bananas at the start of this year. Share price went from 24 cents up to 52 cents, and it's been going sideways ever since. So maybe I should have a look at GDM over Adelong. So in fact, for some reason, I just looked at Adelong presentation. I should do that with GDM. And there's one investor presentation on the 15th of April. Let's open it up. Let's just see. Why GDM? Why gold? Why GDM? Oh, interesting charts there. It's not the best presentation. I'm going to give you that much. Yeah, it's probably one of the, I'm not going to say anything else. I'm not going to say anything else. Okay, and that's all I have for GDM and ADG, Adelong and Great Divide. Had to think about the names for both companies. Company coming in number two is 29 Metals. Share price down 4.35% on a quarterly update. Keeping this one on my radar. There was a couple of interesting things I think in this. So they've got a project called Capricorn north of Mount Isa that has been in suspension because of significant rain 2, 3 years ago. And it looks like it's getting close to maybe going back into production. Now, the overall numbers weren't that spectacular, but this is, yeah, you can see copper output, nothing much, it's oscillating, zinc output, oh, a little bit lower than what we've been seeing. Costs a little bit higher than last quarter, but sort of normal previous to that. But what I found interesting for Capricorn copper is this water level, site water inventory reductions. Now, I could be completely wrong, but it seems like they have reduced the amount of water at this site to the point where possibly they could think about going back into production. I'm not sure how long it will take. They do mention here the company continues to progress a constructive dialogue with Department of Environment, Tourism, Science and Innovation in relation to a long-term TSF solution for Capricorn copper with submission of an application for TSF3 on track for September quarter 2025. So I'm just wondering, are they possibly getting back to production? Maybe a few more quarters left. And that would be significant for this company. So 1.3 gigaliters reduction because of something big. Looks like we'll start of 2024, so not that long ago. I thought it was maybe 2 years ago. Okay, so okay, not okay. I didn't mind that little update from 29 Metals. Wasn't so amazing, but one of the things I did like about this company was the chart. So has this hurt the chart? Not really. In fact, the share price has bounced. Did get as low as 30 cents and has bounced 10% from there. So we have seen a little bit of support today. A little bit of buying has come in. So I don't mind this chart at all for 29 Metals, particularly when I do think more likely good times ahead for this company than bad times. Okay, now on to the stock of the day, Integrated Research. Oh, share price down 14.3% on 4-year results trading update. And I got a little bit confused, because I went straight to the table. And the first column was June 30th of June 2025. Second column was June 2024. And I didn't really read the period it was relevant. And so I just went to the numbers and I went, oh, they've gone from 66 to 68 to 83.9. Ah, what a nice little increase in TCV, revenue, and EBITDA, and dropping cash at bank. So I just saw a really nice increase. And then I realized, why is it down when it should be up? Oh, for some reason, they've gone the first column, the most recent date, the second column, earliest date. And for me, it should be the other way around. It's just obvious. It should be first, earliest date, first column, latest date, second column. Anyway, so TCV down 19 to 21%, statutory revenue down 17 to 20%, pro forma revenue down almost 2%, EBITDA down 31 to 39%, cash at bank up 27%. So at least they are generating a little bit of cash flow, but not the best update. Not the best update. So financial year 25 renewals book was softer than financial year 24. No. In fact, you do see the word soft in all its forms quite often in this particular, the commentary of this announcement. So for instance, we see softer, TCV softened, and I'm pretty sure you see it elsewhere. Despite the Americas TCV and revenue performance softening, you don't want to see the word soften used a lot or soft used a lot. A lot. A lot. Not a loft, a lot. What else? I think I stopped it there. What else? I'm going through this really quickly. Yeah. I think that's all you need to know. A lot of softenings, a lot of softs being used. They're talking about financially 25 as a transition year. but we really want to see the company going back to growth. Now, if we have a look, oh, by the way, this is the company that hired, yeah, Ian Lowe. I was like, when they hired Ian Lowe, I was like, what? Why? Anyway, that's a different story. Now, let's have a look at the chart. So, about a year ago, this, or maybe just over a year ago, this had the signs of a nice, really nice breakout. Yeah, just over a year ago. Share price broke out. They released a couple of really good updates. On the 9th of May, 2024, share price up 54%. So I was partaking in this little breakout. And then when the company released their results on the 20th of August last year, share price dropped 14.5%. Initially, share price was up. And just how the market reacted to those results, I got out of that trade really quickly. And you can see the share price has dropped since then. It looks like the share price has been going sideways, consolidating. Yeah, so nothing really to like about this chart for integrated research, and nothing to like about the announcement, nothing to like about the chart. So definitely one to leave on the sidelines right now. Definitely not a high quality company. So really for me, this is more a trading stock, and chart is not that impressive at all. So anyway, so unfortunately, I thought maybe this could be the breakout because yesterday the share price was getting close to the previous highs. And I was thinking if the share price can get above 52 cents, that would be a nice breakout for this company. So there it is. If the share price could get above that level, it'd be a nice breakout. But alas, not to be. Now, chart of the day. So MinRes or Mesoblast? No, we go to MinRes. We'll do Mesoblast tomorrow if I can remember. In fact, I can write it down. July 18, Mesoblast. MSPCOTD. There you go. Why MinRes as the chart of the day? Share price, long-term downtrend. In fact, it's been a downtrend since May of last year when the share price was about $70 or above. I can see during this downtrend, on occasion, the share price will rally quite significantly. In fact, I still remember when the share price dropped below $30 back in September last year, and the share price rallied, went from $30 back up to $56. And I do know quite a few people who were getting very excited when the share price of MinRes got to $30. They thought this was a raging buy. Unfortunately, the price has been as low as $16, almost $15 back in April. But a few things to like about what's been happening lately. First of all, share price now is at, we'll say a medium-term high. Last time share price was this high was February. So we're talking about 5 months. So 5-month high. So we have also seen the share price get above the 2 recent highs. So we have seen a higher high. In fact, the last 2 lows have been higher. So we have seen a higher high and a couple of higher lows. We'll be seeing a moving average crossover as well. Share price has been going sideways the last 4 days. That's good. So there are things to like about MinRes, and there is a chance that it's now moving into an uptrend. Now, MinRes and iron ore and lithium are important, they're all related. So the way iron ore and lithium goes, the way MinRes will go. So that's also something to keep in mind. It's a tricky thing to do that. I do find mining companies to be tricky trading because it's also dependent on the underlying commodity. Okay, so that's MinRes. I do like this chart. I think it's on the precipice of potentially breaking out. You could even say it's already broken out. If you had that argument, I would believe you. I do prefer breakouts on positive financial news. We haven't had that with MinRes just yet. Okay, that's all I have for this particular ASX Daily Rundown video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.